Hey everyone, welcome back. Today we're talking about a name many are watching in Fintech, SoFi Technologies, ticker SoFi. With digital banking on the rise, student loan changes and shifting financial behaviors, SoFi is in a position to capitalize. But does that make it a strong investment in 2025 or a risky bet? In the next few minutes we'll go over SoFi's business model, its recent growth, what's working, what's concerning, and whether you should consider this stock. What is SoFi ANAMP? How it works? SoFi, short for social finance, was founded in 2011. It began by offering student loan refinancing, but over time has expanded into a full suite of fintech services, personal loans, mortgages, and credit card products, a digital banking platform, checking, savings, investing, and cryptocurrency through its app. Other services like financial advice, insurance, and more recently, features tied to improving credit, etc. What makes SoFi interesting is its attempt to combine banking plus credit plus investing under one digital roof, targeting younger consumers who want all their financial tools in one place, online first. Recent performance ANAMP, key metrics. Let's examine how SoFi has been doing lately. As of today, SoFi is trading around 26.42 per share. The company has seen growth in its membership base, users who use multiple SoFi products. Cross-sell and ecosystem growth are key to its strategy. Revenue growth. SoFi has been growing revenue year over year, particularly in loans and banking fees. However, it has also incurred losses or slim profits recently due to interest rate environment, cost of customer acquisition, and regulatory costs. Key tailwinds. Rising interest rates for lenders tend to increase net interest margins, helping fintech lenders. And removal or reform of student loan repayment programs in US creates demand for refinancing or refinancing alternatives. Growth of digital banking. More users comfortable with mobile app banking than traditional branches. Strengths and AMP. Risks. Let's dig into what SoFi does right and where it might stumble. Strengths. Diversified fintech platform. It's not just student loans. SoFi has banking, investing, credit, etc. that gives multiple revenue streams. Brand ANAMP. User experience. Often praised for slick app design, convenience, and targeting younger demographics which are more tech-savvy. Interest rate environment. With higher rates, lenders can often earn more from the spread between what they charge borrowers and what they pay depositors, or cost of capital. If SoFi manages that well, margin upside is possible. Cross-selling potential. Users who use multiple products tend to cost less per product and generate more revenue. If SoFi can increase user engagement, profits can rise. Risks. Regulatory and AMP. Legal risk. Fintech is under increasing regulatory scrutiny, credit disclosure, consumer protection, banking regulations. Any misstep can be costly. Credit risk. Higher interest rates also stress borrowers. If the economy weakens, defaults could rise, hurting SoFi, which does lending. Profitability and AMP. Cost. SoFi has to spend on marketing, compliance, tech infrastructure. If growth slows but costs stay high, profits could suffer. Competition. Traditional banks adapting, challenger banks and fintech giants all compete. Margin and user acquisition pressure is strong. Valuation. Some investors feel SoFi's valuation already assumes strong growth ahead. If growth disappoints, stock can be volatile. SoFi in 2025, an AMP. Outlook. What might happen over the rest of 2025 and into 2026? If SoFi executes well, gaining more banking customers, increasing wallet share per user, and managing interest margins well, the stock could see substantial upside. Monitoring metrics like net interest margin, NIM, deposit growth versus cost of funds, default rates, customer acquisition costs will be key. Macro environment matters. If rates stay high or rise more, that helps SoFi's lending. But if a recession hits and defaults rise, that could be painful. Regulatory developments, student loan policy, fintech oversight, will strongly affect growth and risks. So, is SoFi a buy in 2025? If you believe in fintech, digital banking, and think younger generations will shift more of their financial life into apps, SoFi has real potential. It's a high upside but with meaningful risk. If you're more risk-averse, you might wait for clearer profitability or more regulatory clarity before investing heavily. Drop a comment. Are you holding SoFi? Buying on dips? Waiting on safer alternatives? If this helped, hit like, subscribe, and ring the bell. I'll catch you in the next deep dive.